With stocks flat for the year, is this a market top or is it consolidation?
Well, remember that we've been conditioned to expecting markets to move up on a steady, almost daily basis. That's not always the norm, and that's why I wouldn't necessarily even categorize this year's performance as poor. It may just fit in the category of normal. Here's what we've seen. We basically shot out of the box in early January on the feeling that the tax reform is going to be great. It's going to lift all boats economically, and that's going to be a wonderful thing. Did the market overshoot? Maybe. Markets tend to do that from time to time. One can certainly argue that the tax bill, the tax law, has very significant effects toward corporate earnings, and as the market was repricing the E in the PE equation, that would be almost unilaterally a good thing for stocks. If E's go up dramatically, that gives P room to follow, and so you never want to lose sight of the PE equation in that regard. But then we ran into some trouble in early February, and we've really kind of been trying to work our way through that ever since. And the proximate cause of February's decline was really, in some ways, somewhat anomalous. People had climbed into the short volatility trade in a major way, and that was an unsustainable situation, because that was another time, as I alluded sort of to it earlier, was that you can't expect markets to just go up unilaterally one way with suppressing volatility. And that ended up resolving itself in a very nasty way, because there were very unanticipated consequences stemming from the ways that people were shorting volatility at all-time lows, I might add. And when you try to press a short that's already down or chase a market that's already higher, when you start investing at the extremes, that has a nasty way of reversing itself. And one can argue that was the case for the stock market as a whole. You saw a lot of money piling into the market at all-time highs. The pullback on the short vol squeeze abated quickly. The market found its level at some significant moving average levels and has bounced off of them. But now it remains to be seen where we go. Last week we saw mostly down days, punctuated by sort of a bounce on major expiration Friday, and then it followed it lower on some news out of Facebook. So you're still in a situation where the market doesn't have the sea legs that it had in 2017, certainly so far in 2018, with the exception of January. Since then, we've really been trying to find a level. The problem is, as you move sideways, which is not an abnormal occurrence, mind you, it seems that way over the last couple of years, but it's really not an abnormal state of affairs. The markets tend to consolidate their gains. It's actually healthy to do so. So the fact that we're not necessarily making a new high every day is not a sign of worry or weakness. It does make it possibly more of a stock pickers type of market, one where you can maybe make some money speculating on individual names rather than just buying and holding an index and closing your eyes and watching it go up. The problem is, it's very hard to tell while it's happening if that sideways move after a long gain is a consolidation or a top. And that's the question that really remains to be seen. If the earnings expectations have overshot the actual capacity of the companies to deliver them, that could be a real problem. But that's the kind of thing that doesn't really resolve itself until next earnings season, which is April, May. And I will say, parenthetically, April, May has often been a challenging time as markets have consolidated after long moves. I think sort of back to the 2000 market top, where we had the Y2K stuff that just propelled the market higher into January, and then we sort of meandered for the first few months, and then sort of fell down into April, May, and the same pattern happened 2007, 2008. So this is not without precedent. However, let me walk you back from the ledge a little bit. This doesn't mean that history rhymes, but it doesn't always repeat. So I think it's premature to say that this is the top, batten down the hatches, as it were. But it also means that you really need to be thinking about do I have gains that need to be hedged? Do I have exposures that may be untowed if the market is hitting a rough patch? And so this behooves investors to be thinking, should I be hedging? Should I be lightening up? Should I maybe be writing some calls to favor income? And if it's a trading range market, should I maybe be buying some puts as vols have come off their highs? These are the decisions you have to be making, looking at your portfolio and your own risk tolerance. And remembering that markets are not one way, and if they're not moving straight up, that's actually not abnormal over the course of history.